India's office market is undergoing a structural reset, and at the heart of it is the rapid rise of flexible workspaces. From just 34 million square feet in 2019 to nearly 100 million square feet today, flex offices have grown at over 24% CAGR, far outpacing the broader commercial real estate market. What began as co-working is now a full-scale enterprise solution. Large corporates, GCCs, and global technology firms are embracing managed campus-style workspaces that offer flexibility, speed to market, and nearly 20% cost savings versus traditional leasing. Operators are expanding beyond desks into design and building, hospitality-led amenities, and even furniture manufacturing, creating a rupees 33,000 crore opportunity by 2027. Tier 1 cities dominate this transformation, accounting for the bulk of the flex stock. Even as India's Grade A office footprint crosses 1 billion square feet, with flexible leasing now forming about 20% of the total absorption and demand expected to cross 80 million square feet in 2025, flex is no longer an alternative, it's becoming mainstream. On this deep dive, we decode how India's flex workspace operators are scaling through asset-light, service-led models aligning with globally proven playbook. But first, let's bring in Rabinder to break down the big trends in this space.
Well, as India's flex workspace market has expanded rapidly with around 500 operators managing more than 2,200 centers across the country, and the growth is clearly visible in overall supply as a flex workspace stock has increased from 34 million square feet in CY 2019 to nearly 100 million square feet by the Q1 of CY 25, and the market continues to heavily dominated by the tier 1 cities, which account for over 88 million square feet of the flex stock, translating into around 90% of the total workspace supply. And from a tenant perspective, flex leasing offers nearly 20% of the cost saving compared to the traditional leasing, marking its preferred option for the companies seeking agility. And over the time, flex offering has also evolved significantly from co-working models to managing offices and campus-style enterprise solution with additional layers such as wellness, hospitality, etc. And within this space, managed workspace has clearly outperformed, recording a 47% CAGR growth since 2018, and going forward, the India's flex workspace market is expected to grow at a 25% CAGR till CY 27, which is much faster than the broader office market growth of 6 to 7% CAGR during the same frame. And flex leasing shares in overall leasing continues to rise, increasing from 14% in CY 19 to about 20% in CY 24, with co-working contributing nearly 30% of the total office leasing activity. And the demand is mainly driven by the GCCs, multinational corporates, IT service and consulting firms. And by 2026, focus is expected to shift towards resourcing and ESG, with emphasis on HVAC upgrade and ESG complication. And occupiers are increasingly looking for the flexible tenures.
India's office market is set for a structural reset, and at the heart of it is the flexible office workspaces. And joining me today is Mr. Harsh Binani, who is a co-founder and ED at SmartWorks Co-working Spaces, and Gulam Zia, who is the Senior Executive Director at Knight Frank. Starting off with Harsh. Harsh, we've seen a very good growth for flexible workspaces. On a CAGR, if you look at it, it's growing at 25% every year as compared to a normal office work. How do you see that going into 2026? There's a report which says that, tier 1 and the occupancy of flexible is nearly 50% odd with respect to the available office space. How is the growth looking at?
Firstly, at the outset, thank you very much for having me here today. It's a very, very exciting time for the industry. This industry is still very new. We are less than a decade old. And in fact, you could argue that this has been one of the most revolutionary changes in the entire real estate landscape in India, that a segment which was practically 0% in 2016 has now penetrated more than 10% of India's commercial RE, which, by the way, has been having a bull run for the last decade. So it just tends to show you that not only is the velocity of growth very high, but when it comes to flexible workspaces, it's almost like a tsunami made a very strong mark on the overall commercial landscape in India. The growth has been fairly aggressive in the last few years. And we expect that this high growth rate will continue to sustain over the next decade, largely because now India is becoming the new office capital to the world. And particularly while flex spaces were catering a lot to global companies, a lot of large Indian conglomerates, unicorns were adopting flex space in a very rapid manner. But over the last couple of years, we've seen a lot of large GCCs come up in a very big way in India. And for GCCs, it's a no-brainer, a natural default choice to look at flexible workspaces because it gives them a lot of speed and scalability options. So we are very excited as we look ahead to 2026. We expect it to be even stronger than the growth that we've seen in the last few years. Of course, the nature and the quality of the growth is going to be different because now you have a fairly good set of large players in this segment. So you would expect a lot more consolidation and further growth to happen.
Ghulam, come in here. Harsh is saying the kind of growth that's going to be seen in the next couple of years will be much more. If you look at the total number of or million square feet of spaces used by Flex, it's gone up from nearly 34 million square feet in calendar year 2019 to nearly 100 million square feet now, and in the next 2 years, it's expected to cross 144 million square feet. What is the kind of growth potential that you see here for flexible working spaces, and where is the next, the drive? What is the next driver for them?
Thank you so much for allowing me to be on this platform. It's always a pleasure to connect with you and your audience. The subject which Harsh covered very elaborately, focusing on flex space side of office requirement of the country, I'll try to broad base it a little, talk about the overall office consumption in the year ending December 2025, where we are right now. It was a historic year. We are expecting a closure of way above 80 million square feet of new office lease, gross leasing happening in the year. And flex space is a big share of that. We are expecting almost about 20% of that in this year will be the contribution or uptake by flex space. And that is something which is telling us lots of stories. On a macro perspective, global headwinds across many countries, and especially the Americas and Europe's, have suffered in a big way as far as office market is concerned. But on the APAC side of it, while China has a similar fate that of European and American office absorptions, but places like Singapore, Australia, Hong Kong, etc., have had pretty flattish or plateaued kind of nominal growth. However, India stands out. The kind of growth we saw this coming year, we saw a kind of growth over last year has been spectacular. And that is something which is expected to continue. The demand is actually not just from the global perspective. Of course, GCC has been the biggest driver, but the local demand, local consumption is also driving the office space demand. And that's very heartening to know that while globally there are headwinds, India continues to grow by leaps and bounds. And that is something which is coming to the rescue of helping the flex space also to perform or rather outperform. The reason is simple that a lot of developers who used to cater to office space supply side have actually been not too keen to develop offices because residential has been a low hanging fruit. You would have seen recently, last 3-4 odd years, the luxury residential market has actually been driving real estate, and many developers who are creating office spaces have moved to residential because they were looking out for better profits, higher margins, and quick sales. So net, the office space new creation itself is under threat. And that's one aspect where we believe that going forward, flex space, which has been doing fabulously for last 2-3 odd years, will have a distinct edge over many of the other players because they have good supply available. And as Harsh mentioned, most of these GCCs are coming in to start immediately. So at least in the short to medium term, flex space will come to the rescue. till our developers do come back to office market and start creating more office stock. So currently, in terms of demand supply situation, the demand has been outstripping year after year, but supply has not been keeping up the pace. And that's where we see flex space players taking a lion's share and playing a key role in this whole development.
Harsh, key point, demand is too much, but supply isn't there, and that's where players like you come in, because you will have partnerships with developers for upcoming projects. How big are these partnerships in that sense, and which are the regions where you're seeing a lot of demand coming in?
Firstly, I wouldn't complain at all. It's a very happy problem to have where demand is clearly outstripping supply. But just to take a step back, if we just look at historically the new supply creation in the Indian context, since about 75 years of our independence, India has produced only about 1 billion square foot of office space, which you could roughly argue is slightly more than New York's entire landscape. Now, fast forward to the next decade, 15 years, there are several reports which speak about another next 1 billion square foot getting added. So if India eventually has the aspiration and the trajectory, as we are all realizing now, is moving towards India becoming a developed nation, it is one big mega trend that is playing out very well: creation of high quality office spaces. Now, traditionally what has happened in the overseas markets is that you've had institutional real estate supply, and that's largely driving a lot of institutional real estate absorption as well. India in some ways has leapfrogged one generation of this completely, because predominantly 75% of India's real estate space still continues to be fragmented. This is the opportunity that SmartWorks seized, right, when we made our pivot from being a co-working player to creating a new category, which is managed office platform, where we realized that times have changed. Global companies in India, they have employees who still have global aspirations. They want modern integrated campuses similar to what you would see, let's say, in a Google or a Meta. So flex space did not necessarily emerge only out of supply scarcity. What it is ushered in is a new world order. It has brought about a habit change that when, let's say, a platform like SmartWorks can manage your employees' aspirations and happiness better, when we can deliver an office space fully designed, fitted out, like a hotel, in less than 60 days to you, then the argument that comes to your mind is, our core competency is to manage our work, not to manage our space. And when someone can do this in a better, cost-efficient manner, can allow us pan-India scalability, then perhaps that has been one of the key drivers why flex space today, Sajith, has become the largest in the world. Nowhere in the world have you seen the adoption of flex space to be as large as India. And today, when we are examining any new prospect, we are looking at it from the prism that the entire office market is available to us to make a dent. We aren't necessarily saying that we are only penetrating flex. We are saying anyone who needs office space, potentially, SmartWorks and its campuses can be potential options for you. Now, specifically with regards to how this entire supply base is panning out, you can almost break down India into 7 major cities. In the west, you have Pune and Mumbai, of course. In the south, you have Chennai, Hyderabad, and Bangalore. And in north, you have Noida and Gurgaon. If you look at these 7 cities, this would largely constitute more than 90% of India's available supply.
True.
Here you have ecosystems available, and here you also have large companies and their bases. So you would continue seeing a lot of new supply come in these cities. But at the same time, now you're also starting to see a lot of tier 2 cities emerge as very important hubs. Tier 2 cities offer a lot of great talent, but at the same time, you almost see a 40 to 50% cost savings in terms of overall cost to value for any large enterprise who's looking to make a base in India.
GCCs are now forming a large portion of flex workspaces. Are you seeing GCCs looking at tier 2 in a favorable manner from a cost point of view? Because from a cost point of view, India is cheaper compared to other countries. But in tier 2, even more cost savings comes into play.
No, absolutely. GCCs perhaps is important for the audience also to understand what exactly are we, because it's a very oftenly confused term. And GCCs in the earlier era were perhaps more synonymous with global call centers,
Yes.
or perhaps a lot of global companies evaluating India from the prism only of cost cutting. But what has happened in the last decade, and more prominently in the last 5 years, is India has emerged as an important innovation capital of the world. So as we are thinking about, as Morgan Stanley had also remarked, right, that India is becoming the office to the world, it is not surprising that this real estate 1.0, right, which was focused more on KPOs, BPOs, has now moved towards a much more higher value-added segment where a lot of large global companies, Fortune 500 companies, global MNCs are setting up their own strategic units in India, which, mind you, is very different to call centers, which was largely outsourced. So this is in-house core capability on core functions such as R&D, product engineering, advanced analytics. Earlier, the running joke was when US sleeps, India wakes up and manages all its calls. Now we are not too far away from the next 5 years, where India will not only able to take advantage of a lot of talent being available, space being available at a significant arbitrage. What can be available here for $1 a foot perhaps will be 10 times more in a US or a UK environment. And on top of availability of good space at arbitrage, availability of good STEM talent, very qualified at an arbitrage, you multiply speed. Then you have a very powerful package. Anyone in the world who needs good talent and space available in 60 to 90 days, India is available. And perhaps in 2030, which is not too far away, when perhaps we anticipate India will continue its lead on the innovation landscape, India getting up in the morning will determine a lot of the R&D and the capabilities which US or let's say the global markets will work on once India sleeps. So that is the massive transition that we are talking about.
And also
in
the
GCCs.
evolution of the flex spaces, from co-working to managed office spaces to campus-style enterprise solutions, which now many of you and other companies are now providing to global companies. Is that also an evolution with respect to the kind of revenue generated per square feet and the margins that you generate per square feet?
No, absolutely. This is the fundamental shift that happened, which made India the largest in the world when we talk about flex space. Co-working in some ways was more of a global idea, where it prospered in a US or a developed market environment because small and medium-sized organizations needed that space. In India, when your own office space is such a hassle, if a flex space is able to come and provide that as an alternative to you doing it yourself, then practically the market shape is much bigger. And from that vantage point, we are feeling extremely excited about the fact that as now India moves towards more commercialization of spaces and a lot of global companies continue to see India as a great alternative, the party has only just started.
So you are, adding what you call additional layers like wellness, which comes into play, or for that matter, hospitality or design and build for companies there. What about vertical integration? Because many of the flex companies are now providing or moving into furnitures and other stuff because the kind of scale they want and the delivery timelines, it's better to have your own setup to have furnitures and build-ups in an office.
No, absolutely. Our focus so far has been to scale our platform. In a very short span of less than 8 years, we've scaled our platform to about 14 million square foot. And Sajid, as you rightly remarked, now Indian employees have access to what is happening in the global HQ for the same company that they are working for. A decade back, or perhaps prior to that, you could get away saying that India will have a separate office and the global HQ will have a separate office. Here today, people expect that you will have the same environment. And therefore, when we pivoted and started this new model, right, of leasing really large campuses, and in fact, you'd be happy to note that 4 of the 5 largest campuses today are in India. They are leased by SmartWorks. In fact, about a month back, we leased one of the world's largest campuses, which is a 800,000 square foot campus with the Hiranandani Group in Vikhroli. And that was largely done with the intent that when you're taking really large campuses like these, you can transform that campus into a well-amenitized ecosystem where all the amenities you mentioned around, right, wellness, cafeteria, creche, gym, is all intertwined in a manner where you can communicate to the end employee that you don't need to come to work to only work, but you can also come here to balance your life with all of these amenities. And therefore, as we see the next evolution, having high-grade aspirational amenities will be a prerequisite basis which a lot of employees will decide and determine where do they want to actually go and work. And when today we serve a very large corporate or a Fortune 500 company or an MNC, the argument that you're making to them is that, hey, not only am I more cost efficient, I can allow you flexibility and our model is more scalable, but most importantly, your employees are going to find a very high productive environment peppered with a lot of amenities, which will make it very easy for you to attract and retain them, which is where it's a game changer.
Gulam, nearly 20% of office space is been taken up by flex spaces this year. What is the kind of projection that you have for next couple of years as we move towards a lot of real estate getting added, the office spaces which started in 2000 getting refurbished, all those when it comes into play, how much of new supply is going to come in and how much of the refurbished supply will come in, and what will be the contribution of flex spaces?
Sajid, the future, very difficult to guess or talk about. However, what's visible is the supply which we are tracking, which gives us a fairly good enough idea for next 3 to 4 odd years, how much of supply will come. And that supply is barely managing to go neck to neck with the demand. In 70s is what we see. The next year we will see that. But if the demand continues to grow the way it has grown current in this year, then we do see a concern of how will you cater to this much of supply, this much of demand, with supply not coming up equally. So that's the space where I spoke about even retrofitting quite a few of spaces which have been not finding favors, coming in for upgradation and bringing them back into the market as freshly fitted out, better spaces. So that's where we are looking at the supplies also coming up by keeping all these things, like on one side fresh supply, the flex spaces as well as retrofittings, etc., put together will give you barely enough supply to sustain. Well, when I'm talking about the gap between demand and supply, one indicator of that is how the rents have increased. In last 2 3 years, in a few of the markets, actually rents have shot up by in double digits, more than 9-10% or even more. The rent growth a year, as the kind of numbers we have seen, especially in NCR, Bangalore, have been superlatively, the rents increasing very, very fast in these markets, because the supply is not good enough, or good supply is not there in good numbers. What do I mean by good supply? In those areas where the occupiers prefer. Of course, there are remote areas where enough of supply is existing, but it's not favored. So that's where the supply wise, if you're looking at forecast, we are looking at next 2 3 years, while demand continues to run ahead of supply, but developers are also pulling up their socks, and then we are looking at space coming up in not immediate next year, but after a year and a half or two, we do see bulks of spaces which are right now under construction will be coming in. So in the mid to short term, we are expecting a little of a concern with supply falling short. But when we're talking about after say 3 to 4 odd years, we will have the demand would also, the supply would catch up with the demand. So the outlook is not something which I'm unduly worried about, because with demand going, the way it is growing in last 2 3 years, it's a good news to all, as what even Harsh was saying, that good demand is always a good news. How do we quickly churn and bring supplies in the market is again now for developers to decide. But the next few years at least, the office space will remain the flavor of the market as far as real estate is concerned.
For a company like yours, as opportunities come in, you will need to raise more capital to service them?
Look, we've been mentioning in our earnings call, as well as the way the business model has been built, it's based on very strong unit economics. And SmartWorks takes a lot of pride in the fact that our cash flows are the North Star based on which we've been able to scale our business. So we are now entering a phase where not only have we emerged as the largest player in the segment, but the business is also generating ample cash flows. So prior to IPO, we had only raised about 500 crores. So we were a very capital efficient platform. During the IPO, we raised an additional 450 crores. A combination of the prior cash flows being generated from the capital we deployed and the new capital is adequate for us to realize our ambitious future. The business does not need any further capital to maintain its 30% plus growth rate, because cash flow from within the business getting reinvested is one of the most powerful ways for you to grow in a non-dilutive manner, which is where SmartWorks is today positioned. And we are at that intersection as well, right, where a certain scale meets all the profitability and the cash flow metrics which we would like to solve for. So we are very excited about.
Are you also
scaling
looking
up.
at larger tenure of tenancy as well, as more and more managed services or GCCs come your way?
That is precisely why the business lends to becoming very predictable in terms of its cash flows. So today, we've introduced a new category, which is 1,000 plus seater, where more than 35% of our revenue comes from these cohort of clients. They typically come with a tenure of over 5 years. And what we've seen as behavior from a lot of these large enterprises, and they include a lot of large Indian conglomerates, but also a lot of predominantly Fortune 500 companies, Forbes 2000 companies, is that once they come in, they typically take a little longer time for their first move, but once they come in, they expand with you across India. So that way, naturally, SmartWorks takes a role of being a pan-India infrastructure partner for them, and the stickiness grows. And that is great business for all of us, because once they come in, all you have to make sure is that their employees are very happy, and they continue to get all the convenience and speed that we end up offering. So today, we believe the platform has been able to build speed. We deliver spaces in less than 60 days. We have that scale at 14 million square foot. And all of this is available at value, which is the clear Indian mantra that globally you would pay 20% premium for having the speed and agility. But in India, you not only get the speed and agility, but you get it at 20-25% lower cost, which is where in India, you can continue penetrating the mass market and making a deeper inroad.
Clearly, there's a structural reset coming in for the flex workspaces. Gulam and Harsh, thank you very much for joining us today on Deep Dive.
Thank you so much for having us. Thank you, Gulam.